Good afternoon. I'm Michelle London, real estate broker with RCFE Resource, and I'd like to welcome you to today's broadcast, The Ins and Outs of SBA Financing, or how SBA Financing can help you purchase your next care home. I welcome you to today's broadcast. Just a little bit of housekeeping notes. For those of you who attended last month's webinar, and that was on what to look for if you're buying a care home, that is up on our website now. And you can get to it by www.rcferesource.com. I wanted to ask you to please save your questions till the end of the webinar after our speaker has presented, and we will then unmute you and you can raise your hand and ask your question. Alternatively, if you feel like asking your question privately to either myself or my guest, our contact information will be in the chat box. So it is with great pleasure that I introduce our speaker, Ms. Rebecca Wong of Pinnacle Bank. She's a top SBA lender, and Pinnacle Bank is one of the leading care home lenders in the U.S. by volume. Ms. Wong has specialized in SBA financing for the last 18 years, and she is a direct lender. We'd like to request you save your questions till the end. And without further ado, I'd like to introduce Ms. Rebecca Wong.
Thank you very much, Ms. Michelle, for your kind introduction, as always. Hi, everyone. I am so excited to be here today to speak my favorite topic, SBA financing towards the care home industry. We have a lot today to cover. So as Ms. Michelle indicated during the presentation, we will not be taking any questions until the end. So we will have, at the end of the presentation, a Q&A session for questions. So let's get started. I am super excited to be here to talk to you about care home SBA financing. I am a SVP SBA loan officer at Pinnacle Bank. I have been in the banking industry, commercial lending for about 23 years. Last 18 years, I've dedicated myself towards SBA 7A loan on the care home industry. In banking, we always say the numbers don't lie. So with that being said, our volume in the SBA 7A lending nationwide, just keep in mind, I only lent to the state of California, is #1 in the US. We are known to have the minimum down payment as low as 11 to 15% of the total purchase price, real estate and business goodwill with additional collateral support, competitive rates, and a thorough understanding of the care home industry. Last but not least, no facility license is required at escrow closing. So with that being said, a lot of you guys a lot of times come to me, the first question you ask is, Rebecca, what are my options with commercial lending? Should I get a mortgage loan? Should I get a conventional commercial loan? My question to those of you, with those intelligent questions are, please consider a few things. #1, what is your down payment and highest leverage the lender can offer? #2,
Rebecca,
what can the loan?
your screen?
Yes. Oh, sorry, I'm just going too excited, too fast. Okie dokie now. All right, let's go back to options. I understand today we're going to be talking about a lot of, a very complicated subject. So hopefully by the end of the presentation today, I can shed some light to some of you guys, and then to make it a complicated matter relatively simple, and then you can walk it away with some, basic understanding in terms of what you can do and what your lender, can help you with. So with that being said, let's go back to, the first topic of today is what are my, financing options? As a lender, I like you to consider a few things. Number one, what is the lowest down payment and highest leverage a lender can offer? Number two, what is the loan proceeds, in terms of real estate and the business goodwill financing a lender can offer? Number three, what are the, rates and terms, but not limited just the rates and terms, because as we all, know in commercial lending, there's a lot more to just the rates and terms. I'll get to that in a second. Last but not least, given the special situation with the facility license in our industry, so you do want to discover with the lender what their standard practice with respect to the facility license, because you do, as a new buyer, a new owner, have to get your own facility license. If the lender requires you to take, to close escrow with your own facility license, that's just simply not doable. So with all those things in mind, that give us the only option in commercial lending with respect to the RCFE care home industry financing for the several reasons. Number one, SBA 7A has had a long-term track record, created by the federal government in 1953. I personally would think if something has lasted this long, it's got its own advantages. Let's explore. Number two, this is a only financing for purchases under $10 million cap. Over $10 million, of course, just like any industry, there will be different players. So today, please just be aware, we're going to limit our conversation under purchases under $10 million. And then SBA 7A, number three, offers the lowest down payment and highest leverage, quote unquote, with a little additional collateral support. Number four, SBA 7A offers competitive commercial rates and terms. And I want to emphasize, competitive commercial rates, not to be mistaken with, mortgage loans that's, supposedly, put a roof over your head and instead of, investment purposes. Last but not least, this for commercial loans, typically lenders implement hefty long-term prepayment penalty. That's the standard practice or standard feature for commercial loans. But for the SBA 7A, the prepayment penalty is only for 3 years. The first year is 5%, the second year is 3%, and last year is 1%. We're done. We'll explore a little bit later on with respect to why this is important. Last but not least, as we mentioned earlier, no facility license is needed at escrow closing. So with that being said, that concludes our conversation about the only option was SBA 7A. Am I eligible? A lot of people ask me. So I outlined some of the basic requirements with respect to the SBA 7A loan. So are you a US citizen or permanent resident? Because this is a federal government program only available for US citizens or permanent residents. Industry experience. For commercial lending, we highly appreciate and then the industry experience. If no, first-time buyer, that is fine. But we always urge you to take the licensed administrative certificate ASAP, so you get the first-hand experience. Sufficient cash. Do I have enough to put down? Typically, the requirement for SBA 7A loan is 10% on the real estate and 25% on the business. And then we also looking at closing costs. Typical closing costs for commercial loans or 7A loans is the majority of it is what we call the SBA guarantee fee, which every penny goes towards the SBA, the federal agency. And then title escrow fees, just like buying a house, and appraisal environmental fees. And then last but not least, for those of you who are licensed administrators, you will tell me, the facility to obtain your own facility license, you need to show 3 to 5 months working capital reserve. And that is part of the sufficient cash requirement a lender is looking for. And then, so next requirement is personal real estate. When we're doing the minimum down payment, it was 11 to 15%. Does the buyer have additional personal real estate collateral that can be pledged as additional collateral in conjunction with the minimum down payment? If not, maybe you can up your down payment somewhat more. For example, the next level with minimum down payment without additional collateral will be 15% down payment, and then pay cash for the business portion. Then we can go about without additional collateral support. And then also as lenders, we have to do a global cash flow analysis to make sure that buyer does not excessive personal liability that would hinder the continuation of the business operation. Credit, we ask for, the good news is in commercial lending, 7(a) lending, I do not have a minimum FICO score, but we are more looking towards a good character of an approach, meaning have you ever had a foreclosure? Have you ever had a BK? Do you currently have any delinquency? If any of those pops up, please discuss with me ASAP so to see if there's a way we can work around it. And again, underwriting, this is more elaboration of the underwriting criteria we just talked about. I'm not going to bore you about it, but let's talk about the basic structure of SBA 7(a) loan. We have talked about some of it throughout this presentation. Number one is, what is my down payment? Typically, we start with 10% on the real estate and 25% on the business. Depending on the actual allocation of the real estate and business you're buying, we're looking at an average transactions, I would say anywhere between 11 to 14% with respect to the minimum down payment with additional personal real estate collateral. Again, a second option without additional collateral for some of those who have a little bit more to put down would be 15% on the real estate and pay cash for the business. And the next question, what is the average rate? SBA dictates everything on this SBA 7(a) loan, including rates and terms. The maximum loan pricing any lender can charge is, prime plus the Wall Street Journal prime with a spread of 2.75. And of course, if you ask me, Rebecca, what is your average pricing? I would say right now, I do not charge the maximum rate, of course. I deal with, warm leads like you guys come through, wonderful people, agents like Michelle and then her team. And then so my average pricing is typically a Wall Street Journal with 1.75, way below the maximum rate, as dictated by SBA. But in today's, market, we're still looking at 9.5%. So some people get nervous and then, Rebecca, what do I do with a variable rate loan? Is there, cap? Is there a floor? The question is based on SBA's, standard operating procedure, there's no cap or floor. So which means this rate can be adjusted on a calendar quarter, and can go up 4 times a year. And then the maximum rate is dictated by, the Fed rate. But at the same time, because there's no floor, the rate can go down as low as Federal Reserve allows. So with that being said, prepayment penalty, we touched base on that a little bit earlier. Why is prepayment penalty very important? Number one, as a business owner, some of you likes to pay down your debt, as early as possible, as fast as possible. That's great. Not if you have a prepayment penalty. So therefore, with prepayment penalty, the question you should always have is, how much am I allowed to prepay without triggering that prepayment penalty? The second question is, Rebecca, a lot of times I get is, Rebecca, what happens when the rate goes up? that with respect to answer that, I always say, well, prepayment penalty is a very important feature because when the rate's up, your ultimate exit strategy would be refinance. You can, once you have some, couple years operating history on your belt with profitability, you can go approach a commercial conventional lender and say, hey, my loan to value now has dropped from when I first got SBA 7A loan. So now, with 2 years profitability and a lower loan to value, would you able to, take me in as a conventional commercial borrower and then fix my rate? So apparently, if you have a very long prepayment penalty, that would not work. So with that being said, the prepayment penalty is only for 3 years for a 25-year loan. The first year is 5%, the second year is 3%, and the third year is 1%. You're done. So that will guarantee, when you need to do, to perform that refinance, you're not going to be, stopped by a prepayment penalty. And then last but not least, we talk about throughout the presentation, the cost of the loan. Typically, the majority of cost of the loan is what we call the SBA guarantee fee. For loans under $700,000, is about 0.55%. However, for loans over $700,000, it's 1.5%. For loans over $1 million, then we're talking about can be, as high as 3.5%. As you can see, SBA, the government agency, is trying to promote a smaller loans. But if you, don't know how to do the, calculation, always just hit me up and I'll perform that calculation for you. So with this, I would conclude my presentation today. Next step is, how do I apply? I typically have SBA application package that would collect the basic information and it would put it together. Those information includes but not limited to your personal financial statement, your bank statement that will outline your cash balance, and your 3 years tax returns on you personally and on any other business you may have, and then a SBA resume that would, reveal some of the key eligibility questions like, are you a U.S. citizen? Do you have any criminal records? And then also some of your professional resume information. And then with that, we, would usually perform a pre-qualification. And then, next step would be, we help you to form a business structure that will, stipulate your ownership, and then any affiliates, will help you put together a simple business plan. A lot of times those could be verbally. I love to hear my clients, success stories, and then all their background stories, where they come from, what brought them to, the care home industry, and what they, makes them think, what's their business plan, what do they have in mind to make this, to make their care home business a better one. And then we will then compile it all together, and then to, put it in a nice professional software, and then send you all the SBA form for you to sign at the end of the loan closing. That would save you a lot of time and hassle having to gone through filling out hundreds of pages of paperwork. But at the end of the day, I want us to conclude this presentation. I want to say I am a big long-term supporter of this care home industry. Again, numbers don't lie. There's a reason why I'm #1 in the US. But I do want to raise some alerts to those of you who are first-time buyers. #1, this is a time management. This is a lot, commitment coming from you with some potential personal lifestyle change. So be prepared for it, and then do discuss it with your agent and then with your family. And then, with that, I conclude today's presentation and open for questions unless Michelle has anything else she wants to add.
Well, thank you very much, Ms. Wong. We really appreciate your presentation. We thought it was a very timely topic to discuss SBA financing today because of our clients who require financing. I'd say 90 to 95% of them do opt for SBA financing. So at this time, would you please raise your hand and we will unmute you to ask the question. Do we have any questions? Yes.
We have a question from Jonathan Taylor. I'll allow him to speak.
Oh, thank you very much. Is there a way that you could share this presentation
Yes,
for future viewing?
Absolutely. It will be put up on our website, which is www.rcferesource.com. And Will can put that in the chat box.
Okay, thank you very much. Good job, by the way.
Thank you so much. Next question.
Okay, we have a question from Juan Cornell. I just allow him to speak. Can you ask your question?
Hello, Juan. Would you unmute him, please?
Yeah, just did.
Hi,
Juan
can you hear?
Cornell.
Yes, can you hear me?
Hi, how have you been?
I've been well. How about yourself?
Very well. What is your question today?
I currently have a EIDL emergency loan from the SBA. How would that impact? Is that do that impact qualifications or anything like that, Rebecca?
That's a great question. That, disaster loan does not count towards your maximum loan, SBA loan limit, which is $5 million. So that's a great question. Because a lot of you guys out there have those. Those are like based on, long-term, 25, 30-year amortization, 30 loan was extremely like 3.85% interest rate. So typically most of you guys have about 100K, 150K, that range. So your monthly payment is like 700, 750. Oh, you have it bigger.
No, I don't have it. No, mine's not that big. Not that much.
Oh, okay. So that's even so, so typically for those loans, the monthly payment I've seen are very low.
Yeah, they are.
Yeah. So as long as you have, just goes back to the eligibility qualification I mentioned earlier with other, with buyers, is we just as SBA lender, of course, will, use your leverage the facility cash flow. Right, the historical, cash flow and the projected cash flow to leverage for your SBA pre-qualification and then qualification. And all we're looking for is you guys don't have excessive personal liability or other business liability, to hinge your lifestyle. So I would have to double check with your personal numbers, but I don't think, if you have other, personal income or business income coming in, I personally don't see that being an issue at all.
Okay. And can you kind of touch on that again, what you said just a few seconds ago about using I currently own my own facility now, and how would my current income be used in concert with the facility? Let's say I find a facility that I want to purchase. That is that the projected income that also will be factored in?
Correct.
Okay.
So, we'll do number one, a business cash flow analysis on the care home, the new care home you're buying. And then we'll, do a global, what we lender call a global cash flow, taking into consideration of all your personal liability, personal income, business liability, business income, to reach to a global, debt service ratio is what we called. And then, like I said, when you and I can look at that, or, anyone interested in that, we definitely, personally, I am the underwriter and then closer. And then I help to continue to service the loan after we, we book the loan on the books. So initially, that would be one of the qualification process I look at with you and with any potential buyer to make sure that global cash flow would work potentially. And then once you get in contract, and we'll get the seller's, tax return seller's information and the market data. We really care about, going forward after you take over the facility, what the cash flow is going to be looking like, for this particular facility you're buying, and on, also on you, as a global cash flow basis.
Okay. That answered that question. Thank you.
Yeah, you're very welcome.
Okay, we have another question from Dushan Powell. Let me just allow him to talk.
Good afternoon. Thank you for this.
Hello, Deshaun.
My question is, when, and I came on the tail end, and that we have to have 15% down for the loan, about 15% when we approve for the loan for the facility.
That's correct. Typically, depending on the actual facility you're looking at, because every facility, typically we're talking about the real estate portion of the purchase and the business portion of the purchase. So the numbers could be slightly different depending on, a facility. And then, you're looking at the location, the size, and also seller's historical cash flow. So that's definitely, you would reach out to, your wonderful agent, Ms. Michelle there, and explore that, breakdown. Once you get the exact breakdown, and then you can apply the 10% minimum down payment on the real estate and 25% minimum down payment on the business to get to your actual, down payment.
Okay.
If not, you can always reach out to me. Yeah, so that's the down payment portion. And then as a good standard practice, a business practice, you always wanted to make sure, you have sufficient closing costs, because for SBA 7A loans or commercial lending, we're already at 86 to 88% leverage. So there's no room to finance the fees. So the closing costs typically come from the buyer. So we do want to make sure you do have sufficient closing costs, right? Cash for closing costs. And last but not least, as soon as we close escrow, state licensing would say, hey, business owner, show me your bank statement for your 3 to 5 months working capital reserve. So therefore, as a standard practice, I typically check for, to make sure you guys do have the sufficient working capital before we move forward. Or, we can talk about, if some of you guys, it come from a HELOC, then you just have to give me the, the statement. Again, if you have outside personal income and, business income, and, some of your funds are borrowed, and that is just fine.
Okay, we have a question from Monroe.
Wait, there you go.
I own a current home ARF, and how would that affect my potential for RCFE?
I'm sorry, repeat your question again. You said you have a ARF, and then you wanted to get into the RCFE industry?
That is correct.
Oh, okay. I think that's more of a Michelle question, but we'll definitely leverage your ARF, expertise towards the RCFE. Personally, I feel, RCFE is, in terms of requirement, is less than ARF because you just need that facility, a license, and then you don't need to have the ARF, vendorization. So yeah, I think more with respect to the business operation, it would be beneficial to learn from, the RCFE owners how they get clients, because the ARF, you don't have to go out and get clients. You automatically get placement from the state, right? So that's one thing. So one particular thing I wanted to emphasize was the way I close SBA 7A loans. Again, the program itself is nationwide. All the SBA lenders have to follow the rates and terms and standard practice. But in terms of our understanding for the industry, is drastically different. I've financed hundreds, if not thousands, of transactions. So typically, the way I do it is with agents' help, like Ms. Michelle, she would draft up a leaseback management agreement to put you as the buyer on seller's facility license for up to 12 months. Because during that 12 months, you need time to, apply your own facility license. So during that 12 months, a seller, the seller would have a huge business, liability if they're not helping us, us being, as a team, to be successful. So, and the seller also, as part of the leaseback management agreement, they are obligated to give you some, training, and they are obligated to share some of their trade secrets with you in terms of how do you find clients, what is their main, referral source. So those things are all very important, I think, coming from the ARF to the RCFE, but I think you will be doing just fine.
Okay, thank you.
My pleasure.
Okay, we have a question from Michael.
Hi. Are there any programs for starting a new RCFE? In other words, buying a property to establish an RCFE?
That's a very intelligent question. So today, because of the time, and then I don't know most of you, what your professional background is, the presentation is very general. But yes, so SBA 7A, like I mentioned, is a program that can finance both real estate and the business portion of the purchases. So with that being said, we can use SBA 7A to purchase a turnkey operation, right? Has both, the real estate component and business component. So I think what you're saying is, hey, Rebecca, I'm looking towards to buy a real estate, right? And then with no business, can I do that? So that would be a startup loan instead of, business acquisition loan. And this, the good news is, yes, SBA can still be used for this 100%. So the easiest way we can do is we have you put down 15% of the real estate purchase price, and then I will come in and finance 85%. And in this case, because you're already satisfied the minimum down payment for the real estate, so there's no additional collateral, is needed typically. And then, however, this type of financing is only available for those who have done, care homes before. So for first-time buyer, I would say that's a very difficult move, because ultimately we need to leverage the buyer's, professional expertise, right? And then preferably your existing care homes operation to say, hey, Michael, yes, you're going to be just fine, starting up a new facility, leveraging, because you've already done it before, you have a great track record with licensing, you have great cash flow from your other facility or facilities. So let's do it again. Not a problem. So if that
Well-
answers the question.
It does, but I have a follow-up question, and that is, I do have experience, so that's not an issue. But how about the financing for the construction part of it, where we buy a property, whether it's single family or commercial, but obviously it's going to require capital for building whatever is needed. Is there separate financing for that?
That is, you are, today's presentation is, I would say, more of a 101. I think you're at 909. So very intelligent question. I would suggest some of it, if you just give me a call when you have some time, explore your specific questions. But here in general, the end of the day, just think of it as any financing program is dictated by loan to value. With the smaller facility, like the 6-bed, unless we drastically increase the square footage of the property, the appraised value will be limited based on the home sales in the market. Am I correct? So with that being said, just because we, put in some renovation, is not going to drastically improve or increase the value of the facility or the real estate. With that being said, we're still at 85% leveraging. This is from my industry experience. So I would say for the single, the 6-bed, practically single family residence, that's very hard to do. However, for the commercially zoned properties, that's more of a cap rate play, then yes, I've done it. The largest facility I've done, as example, is a 79-bed. I did a vacant. We did 2 loans. The first loan is a acquisition loan that allows us to quickly close escrow for the buyer to acquire the real estate and then start the business. The second loan we did was, renovation on the facility. Initially what he did was he went out and got a quote from a licensed contractor, and based on that quote, exactly outlined what he's going to be doing. And then we were able to do as proposed, as completed, commercial appraisal. And then based on, the cap rate, and then as, all the work that will be done, and then increased business cash flow, the appraisal came back at a higher value. And we just, as a lender, we did 85%, cap on the, loan to value. And then, subtract the purchase loan, and that's your, renovation loan right there. So that's, a more complex situation. So that's why I recommend, if you have specific projects you're looking at, we'll take it offline. I'll explain that to you. But yes, I would say this is what SBA is known for, is business acquisition, startup, renovation at a high loan to value.
Okay, we have our last question from Conwell.
I'm sorry, can you hear me?
I can hear you now.
Oh, okay, perfect. Yes, I have a couple of questions, actually. First, I have an existing RCFE, and if I am to purchase a new real estate property, like maybe a new construction home, and then get it licensed for RCFE, is this considered your real estate part of the loan, is what you're offering, or SBA is offering?
Correct. So that would be considered a startup loan. Like I mentioned earlier, that everything will be instead of asking the seller for historical numbers, we just treat it as a startup loan. You're putting down 15% minimum down payment without additional collateral. And then we'll do a 25-year loan, amortize 25 years, 3-year prepayment penalty, and then leveraging your existing care homes, historical business cash flow, and then, right, as a basis of our projection. And also I'll add my, industry, expertise to see what my other clients in the similar city are doing, and then to kind of reach to a reasonable projection to see if that covers, successfully covers the debt repayment source of the loan, and then get it done correct.
And then along with that, what interest rates are we looking at for something? I know it's going to be based on many different things, but just kind of range.
Right. This is a national loan. So based on the standard operating procedure, SBA says the maximum loan we can charge as lenders is Wall Street Journal Prime with a spread of 2.75. So that, and it's a variable calendar quarter adjust. However, to remain competitive and then remain, helpful to the industry, I only charge Wall Street Journal Prime with a spread of 1.75. But this year, with all the rates increase, everyone's been hearing, this rate is at 9.5%. But for those of you who have been around and obtained the SBA 7A loan before, you understand this rate goes ups and down sideways. And then what, of course, the Federal Reserve is meeting today and tomorrow. With 3 banks failed last weekend. Hopefully, originally they were talking about a 0.5% increase, but now hopefully we're talking about, a 0.25% to no increase from this point. What, we don't, nobody has a crystal ball in front of them. Every year we have our challenges, we have our opportunities. This year, I think one of the battles we have to battle is, high interest rate. So right now we're at a 9.5%. Was, to answer your question. But like I said, please don't just stop there. And then, it's the 25-year loan amortized 25 years. What I've seen from my top-notch clients do over the year is they use this loan, they take advantage of this loan as an engine. With engine, we say, when we say engine, it gotta keep on rolling. So you take advantage of the low down payment, high leverage to get in a couple years, 3 years, when your loan to value drops down, you have a couple years of, profitability on your belt. Then you go to a commercial conventional lender and say, hey, I'd like to refinance and fix my rate. What that also does is SBA financing is only limited at $5 million per borrowing group, whether it's an individual or several individuals. So with that being said, that $5 million goes out very quickly in the state of California. So, the way to do it is just we take advantage of the program, get in with acquisition, and then a few years later, and you park it on and fixed rate commercial conventional program, freed up your SBA eligibility, and then do it again.
Okay, and another question along with that was once we apply for the loan, how much time frame is given to get a new real estate license and running and going?
I give myself, that's one of the things, is my, biggest commitment is I'm here for you guys. With the understanding that facility license new application can take anywhere between 3 to 10 months radius, right? I would say first time buyer, probably 5 to 10 months, realistically. I give you guys plenty of flexibility to do things your own way. Like I mentioned earlier, typically the standard practice is Michelle, agents like Michelle would draw up a leaseback management agreement between the buyer and seller, which stipulates everyone's responsibilities and then your obligations. So as a buyer, you're obligated to typically apply for your own facility license within 30 days after escrow closes. So once you get started, you have about 12 months to complete. So the seller, has the obligation to keep their facility license current for you as a buyer between, for about 12 months or, anywhere. Just as soon as you get your facility license, then they can terminate their own, just to be fair.
Okay, so from my understanding, you said within 30 days we apply for the license, but down the line, if I do decide to no longer run it as a facility or turn it into another, maybe a rental property or something, is there still an obligation required to refinance or do something different, or am I able to do it?
Technically, SBA loan is only used for owner operator. So correct. If you just later on decide to use it as a rental, you should be paying off your SBA loan and then refinance to park it on a conventional loan or mortgage loan. Correct.
Is that the last of our questions, Will?
Yes.
Okay. Well, I'd like to thank Ms. Wong very much for today's informative presentation. If you look in the chat box, there'll be contact information for myself and Ms. Wong. If you want to reach us privately after the presentation, you can certainly do so. If you want to see a copy of today's broadcast and last month's broadcast, you can go to our website, which is www.rcfe.resource. Next month, we'll be having a very informative presentation, and that is the importance of maintaining accurate financial statements. Don't think that this is just a chore to be done every month. No, financial statements, primarily P&Ls, can really guide you as to the direction of your business and provide valuable information.